Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the first video of the year and a really good video to start off the year because Getquin decided to already release the dividend data for 2027. And I believe that this makes Getquin so much better for us dividend investors that I needed to make this video. And to start off, what a difference a year makes. Because last year in 2025, in August and September, I made a couple of videos in which I complained a lot about the fact that Getquin did not have the dividend data for 2026 available yet. And this year, yeah, they already have the dividend predictions for 2027 available, and we are only at the beginning of January of 2026. And that is really great. So I'm going to explain once again when I'm in Getquin. So let us jump to Getquin, and I'm first going to go to my U portfolio. There I have my U portfolio on my account that I use as Joris Invest. And yeah, right now the value is 4,054.71 Swiss francs. So the past week it went down a little bit and then it moved up again. So still down for the week, but that's not a problem at all. You know how it goes. Okay, Nestle has a little bit of problems right now with their baby feed, but yeah, more about that in an upcoming U portfolio update video. But here, this is what I want to talk about, the dividends premium page on Getquin. When you go there, you always see your previous dividends. This number, they should actually remove it because it doesn't say a lot. These numbers are the numbers that count. So I started in 2024 with this account, with this portfolio, and I didn't receive any dividends in 2024. Then in 2025 it started, and yeah, now we have the prediction for 2026 and the prediction for 2027 already. And here you can see the prediction 159.38 Swiss francs is their prediction for 2027. And compared to 2026, this is a plus of 4.92%. And this is how they calculate it. So they make predictions, so they forecast the dividend in 2027 based on the dividend CAGR that they have in their books for regarding the price that they have calculated for 2026. So overall, the dividend CAGR for my portfolio must be 4.92% according to Getquin. So that is a thing that you can see. Here the plus 82.77% is probably because it's not probably, it is due to the fact that I bought a lot during 2025, and because those numbers increased of my numbers of stocks, and that's why this number is 82% higher than the dividend that I received in 2025. It's all brut, those dividends, no tax is deducted, so that is something you need to keep in your head as well. But you see that yeah, when you click here, you can already see the predictions for 2027 for all the dividends that you can expect. Of course, this year 2026 is the most important part, but yeah, it's just great that you already have the dividend data, because the problem, and I explained it in the videos in which I complained about the fact that Getquin didn't had even in September not the dividend data for 2026 yet on their platform, because when you invest during the year into stocks that pay out their dividend in May, well, yeah, you don't see any evolution in the number for 2026 because it's not there yet. And now every time when I buy a share in 2026, in January, February, March, till the end, I will always see the number for 2027 go up. And for us dividend investors, that is really important. And okay, in 2026, up till April, all the dividend stocks that I buy that pay out in May, the number will go up for 2026. But once you are past May, you will see so few movements, except for when you buy Shell or when I buy ENG or Logitech. And here AB InBev as well, but I don't know whether or not in 2026 they are going to pay out a dividend in November. So they did it last year in 2025, but whether or not they are going to do it in 2026 again, that's a question mark. So they do make assumptions, and here the assumption is they are going to pay at the same moment as they did last year, and they are going to increase it with the dividend CAGR that we have in our books. And normally their dividend CAGR, they have it when you are premium member. I'm not a premium member, so I'm not sponsored by Getquin in any way. I just like Getquin a lot. I'm really often on the platform reading along with the chat that is going on, especially the dividend stocks that I'm invested in. I follow those for sure. All the remarks that come there, yeah, it's for you. In the section for you, you can follow the chat, and yeah, most of the time I give reactions as well, so check Getquin out for sure. And then of course here we can go to our ETF portfolio as well. You see I have a different account for that. You also see that we have the satellite stocks. My U portfolio is there as well. So I do have a double accounting there a bit, but yeah, I have this account on my phone so that I can follow along. And then we have the CH DVD from our three little girls. Then we have a trial account where I mess around a bit, and then I have the trading account where I play around with just 1,000 Swiss francs. And yeah, it's going great. I have it now for 6 months, and I'm up there 38%, so I can't complain. But the most important thing here, once again, you go to all time and you see already the dividend forecast for 2027, and that amount will be 3,632.12 Swiss francs. So with the dividend CAGR of 3.21% according to Getquin. So you need to check that number, of course, in the beginning of the year. It was a little bit higher, and I will explain you directly why it isn't that high anymore, and that's because of the dividend announcement of SDGPEX or ISPA. So for I need to go to 2026 for that, and because of the number of 2026 where the dividend prediction is down, not anymore prediction because it's already announced. The dividend actually, if you look at it, so on the 15th of January we will receive per share 0.25 and a bit euros compared to last year where it was 0.37 euros per share. So normally it will even out. I think then that in April the amount is going to be way higher than the 17 and a bit cents that we received per share. But yeah, it's just the way it goes. Sometimes they don't have all the same dividends received from the stocks that they have in their portfolio as the year before, because those stocks or companies pay out a little bit later, and then their dividend payment goes down for that quarter and it moves to the next quarter. But because of this, yeah, here their quarter assumption stays the same. It's just plus 7.49% because that's the dividend CAGR that they had for the past few years. And here you can see it again. In July, it's plus 7.05. And then here in October, it's plus 7.34% again. But because of the lower amount that we will receive in January compared to last January, they already adapted their dividend CAGR for 2027, and that's why the dividend CAGR for 2027 of our overall portfolio is a little bit lower. But that's okay. That's a thing that happens because you need to make presumptions and assumptions, and it's going to be the case for me as well. So when I do my calculations, I will say, yeah, this quarter they paid out that much, so I will have a lower payout for the whole year as well, and that just changes the overall dividend prediction of 2027. So it is the way it is. All methods have their advantages and their disadvantages. The main advantage is that you see the numbers go up more, and especially for stocks, because after May here in the European continent, you hardly see any movements for 2025, and as 2026 wasn't around, yeah, I was always hoping to get the information, and now in 2026 I don't need to complain because 2027 is already there. So overall, I like this edition a lot, so it's very good, especially for us dividend investors. I'm super happy that they have this info now on their website and on their app. They do make assumptions and it adapts their calculation for 2027 according to the dividends that seep in throughout the year. So I showed you that for the ETF portfolio, but I believe that these mistakes are less important than having that prediction number for 2027. And Getquin has to calculate it somehow. So, and every calculation method has its disadvantages and advantages, but having the number for 2027 is such a big deal that I don't mind at all. And for companies that pay out yearly dividends, this is of minor concern for 2027 because, as we know, in the European continent we have a lot of those. So especially in May, a lot of companies pay out in May. For my UCOM portfolio, it's the same. And I believe that this prediction of 2027 now allows all investors to see what effect every buy has on their future dividend. So whether you buy now in January, you will see immediately the total effect for the dividend in 2027. Okay, you will see it for 2026 as well. But once you pass May, it will make such a huge difference. It's crazy. And you can also calculate the actual future dividend yield of your portfolio. So then you need to divide the prediction of 2027 by the current value and multiply it by 100. So for the U portfolio, this means that it's 159.38 divided by 4054.73. Okay, it was 71 in the video, but I made the presentation a little bit earlier, and they always adapt according to the currency worth. So yeah, it's a little bit off, but not by a lot. And then you have to multiply by 100, and this means that the U portfolio has a dividend yield of 3.93%. Okay, you have to live with the assumptions that Getquin makes, but as said, every method has its own quirks, and having the number is such a big deal that my conclusion is that Getquin just got 100 times better for dividend investors. And I want to thank Getquin for doing that. And I also want to say I'm not sponsored by Getquin, but I like Getquin so much. I would suggest you to also start with Getquin. Get it on your phone and just get all the information in it. Sometimes it's a bit tedious because you can't import all the data directly into your phone, or with connecting to your brokerage. That's it's sometimes a bit difficult. But once you have all the data in, and you have to do it manually, and you only do 1, 2, or 3 trades every month, like I do, then it's really easy to get everything automate to include everything into Getquin. And compared to Snowball Analytics, in Snowball Analytics, every dividend you also have to enter there manually. In Getquin, it knows you had so many stocks or so many shares of ETFs. So on the day that there was an X dividend and you had so many stocks, on the dividend date, on the payment date, you will get the amount on your app. So that makes things a lot easier than Snowball Analytics. And yeah, I just want to say, go check Getquin out, and see you on the next one on my YouTube channel. Bye.